I'm not long base metals or energy right now. I'm just long an awful lot of gold at this moment, because I don't want to buy energy in a period of time where global growth is going to be anemic. I just wouldn't do that because of the port strike. I could see the U.S. economy potentially grinding to a halt. I mean, you can't, cars can't be imported or distributed, and lumber and everything. I mean, it goes through these ports. There's a significant amount of the U.S. Imports and exports go through these ports. So you could have a very sharp recession if this thing doesn't work out very quickly.
In today's news recap, silver price struggles below 32 pivot. Will bulls push higher? Silver prices hovered at $31.85 on Monday, despite a strong surge in demand, particularly from the solar energy sector. The recent decline can be attributed to improved market sentiment. Investors are shifting focus away from safe haven assets due to easing concerns over a U.S. economic slowdown and optimism around China's stimulus efforts. Ongoing supply shortages are set to play a critical role in determining silver's future trajectory. According to the Silver Institute, global silver demand has outpaced supply for 3 consecutive years, with a projected deficit of 215 million ounces for 2024. This imbalance is driven by increasing industrial consumption and limited new mine production. Despite the rise in prices, production remains 62.8 million ounces below its peak in 2016. Additionally, the Bloomberg NEF report highlights that a broader shortage in key transition metals could further elevate silver prices. The report estimates a $2.1 trillion investment is required by 2050 to secure a stable supply of raw materials necessary for clean energy technologies. Without this investment, the costs of essential metals like aluminum, copper, and lithium could rise sharply by 2030. For now, the combination of rising demand and limited supply points to higher silver prices in the near future. As shortages deepen, competition for these limited resources may increase prices, especially if supply disruptions persist. Staying attuned to these market developments will be crucial for investors and industries relying on silver. This will help them navigate potential price volatility and secure long-term supply stability. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps.
First of all, I've been long gold for quite some time. So it's not a new position. And we have over 10% of our entire portfolio in physical gold. I don't have any miners, but they're definitely on the menu to be purchased. I just don't like stocks here that much. So if I don't like stocks that much, I'm certainly not going to go, into miners, which are stocks. But I can make an exception to some degree because the gold mining complexes never looked better to me. Here's the problem, and we talked about energy. One of the biggest input costs to gold miners is the energy it takes to dig gold out of the ground. That's what makes it so rare and beautiful in the first place to own, is because it's actually an element that's extremely rare. And you have to spend a lot of energy, which includes oil, to get that gold out of the ground. So if we do have a big spike in energy costs, it's not going to do well. It's not going to fare well for gold miners, but it will do very well for the gold price. So I'm not saying don't own any miners. We don't own any currently. They're on the menu. I could buy them in the future, but I feel much more comfortable and safe in just physical gold right now. And the reason is, I don't know if I answered your question thoroughly. The reason is not only because of geopolitical strife, it's because exactly what I said before in the last question. We have intractable stagflation as far as we can see. And what that involves is a government that is printing money to purchase long-term debt. That is our fate. I think we're going to look like Japan as the best case scenario, or it could look like Zimbabwe. But anything priced in dollars is going to go way up through the roof, especially gold. So gold loves falling real interest rates. So if you have a artificial cap on long-term rates. The Fed seems hell-bent on cutting interest rates on the short end. I guess he's declaring victory over inflation. Jesse, wouldn't you like to be one of the meetings of the FOMC and say, Mr. Pento, I'm calling you. Okay, thank you, Jerome. It looks like you're now not only declaring, inflation dead and buried. You vanquished the inflation problem, even though it's way above your target still. Why are you cutting by 25? No, you cut by 50 basis points, which means you really want to get inflation higher. But Mr. Powell, it's the level of prices, you moron. It's the level of prices that has decimated the middle class of this country. What are you doing at the level? What are you doing to bring down the level of prices? Oh, no, you can't have the level of prices fall because that would really kill banks' balance sheets. Their assets are primarily mortgage-backed securities and real estate-related assets and consumer loans. And if you have deflation, that would kill the banks. So you can't do that because that's who you're really in charge of protecting. Anyway, to answer your question, yeah, gold is probably in a very long and record-breaking, historic bull market. And me and my clients.
In today's news recap, Bank of America expects declining silver inventories to make the deficits count. The Silver Institute shows that the silver market has been in a deficit for the last 5 years. And during that time, we've seen substantial decreases in global inventories. Which makes sense, as the metal has to come from somewhere to meet the shortfall. Yet, with no resolution to the gap in sight, as the deficits are widely expected to continue years into the future, a recent Bank of America report suggests that the declining inventories are starting to make the deficits count. Their report also commented on China's surging silver consumption, which has continued to grow in 2024 as their solar production has, again, exceeded expectations. And with governments calling for a tripling of green energy by 2030, the demand for silver is going to have to increase if the governments are going to get anywhere even close to meeting their targets. China has already shifted to being a net importer of silver. And we've personally talked with one of the larger silver producers who told us about how Chinese smelters have been going directly to Latin American silver producers and offering substantially reduced treatment charges because they're able to take advantage of the increased premiums in China. Now, we'll show you more clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps.
I think I don't have much faith in our current administration to fix the problem. Not that it's in his jurisdiction, but so if this goes on a long time, we'll have even a slower economy than even I imagined. So in that scenario, you want to avoid base metals and energy. You want to concentrate on gold because gold will benefit from the geopolitical strife. Energy could benefit as well, but that depends on the reaction that Israel has. So that's why I say don't invest a whole lot of it. I think you're correct. If you're going out 5 years, I don't have 5-year time horizons. I don't like that because, and with all due respect to you, I mean, I manage money and I can't tell my clients, well, we're going to have 4 years of struggle, but the fifth year is going to be great. There's no reason for me to do that because I'm here every day and I have one portfolio. I have over 1,000 accounts under my purview, but I could buy and sell every day if I wanted to. So trade in and out of positions every day if I wanted to. So there's no reason for me to project 5 years down the road. But if I was to project for that far down the road, I would say the level of stagflation that we're going to experience after this round of recession, depression, wherever we're going to go through is over, is going to be unbelievable because we just don't have the tax base to fund U.S. deficits and debt and the interest on the debt. We just don't have it. The tax basis is not there. In fact, our debt is over 720% of our revenue. I mean, you have an insolvent condition here in the United States, in my opinion. So debt has to be monetized forever and ever. And that means you're going to have a lot of inflation down the road. And I don't know of any better hedge against inflation than energy. So we're enjoying that ride.
Do you think we could see a resurgence of inflation in a serious way, going back to the Fed cutting by 50 basis points? If they continue to cut, a lot of people believe that will cause a resurgence in inflation. They're stuck between a rock and a hard place in this situation. Do you think we could see inflation with a vengeance come back? What are your thoughts there?
Well, inflation isn't the natural order of things. If you tied money to a gold standard, so if you limit the base money supply, that's what the Fed controls. They control the base money supply, and then banks can, in a debt-based monetary system, the banks control the rest. But if you had a stable monetary base, or one that went up maybe by 2% a year, which is commensurate with the mine supply of gold, you wouldn't have any inflation at all. Especially if you let banks go under. I mean, if banks didn't have the liquidity to back their loans, they would go under if the loans started to go bad. So they wouldn't be so careless expanding the monetary base from the other aggregates, M1, M2, and M3. So we wouldn't have any inflation. So the natural order of things, Jesse, is for deflation to rectify everything. So it's going to take a tremendous amount of fiscal and monetary support to create inflation. And I think that's exactly what you're going to get. If you look at the election that's coming up, we have, Jerome Powell. Yeah, we have Jerome Powell at the Fed right now, but we could get Donald Trump. We could get Kamala Harris. But what I'm most concerned about is a government that's not divided. In other words, you get a clean sweep on one side or the other. So you're going to get, if Trump gets elected, you get all the tariffs, but you'll get massive tax cuts, which I believe, I'm a big believer in tax cuts, but they should be offset by spending cuts. So you're not growing the size of government. That's not going to happen, unfortunately. And then if, God forbid, you get Kamala Harris in there, you have all of her handouts that she's going to do for having a kid. Here's $6,000. You want to start a business? Yeah, how about $50,000? Here's $50,000. Oh, you want to buy a house? Here's $25,000. I mean, where's the limit? And she cannot do all of that by executive order. But if she has both houses of Congress, then it's going to be lights out. So what I hope is going to happen, and what I believe is going to happen, is we're going to have divided government. And in that case, what you could have is just the expiration of the Trump tax cuts at the end of 25. So you're looking at deflation in a big way, if that's the case. Or that'd be a big deflationary impulse that occurs. And then you just have the executive orders, say Trump wins, and then you just have a divided government. Or even if Kamala Harris wins, you're just going to have executive orders, which are limited. Thank God they're limited. So you might have the expiration of much of the Trump tax cuts.
What do you think of Pento's take? Do you agree with him? Post in the comments section down below your honest opinion, and share with the stackers if you think a major recession is coming in 2025 or not. Now watch this video right here because you'll love it, and I'll see you on the other side.